Hey guys, how are you? Crypto Sniper here, checking in. Indeed. So John Bollinger, a great guy for technical analysis. The Bollinger Bands are awesome, but they're awesome for one thing for me, not the rest. In terms of how I utilize them, they're awesome because of the illustration of volatility constriction. That is this gold nugget. I sometimes think people trading inside the bands and all of that, you reduced essentially to moving averages and standard deviations. The key thing that gives you value, and we don't give much plaudits to many indicators that are mathematically derived. The Bollinger Band has some value there, so credit him. John made a call on Bitcoin expecting a correction, and it went up, and he was admitting to being wrong, which is gracious and the right thing. We will be right and wrong all the time. So, you know, he's a grown up in the trading world. The reason why I'm highlighting this is not to, he's wrong. I respect this guy. I had a similar feeling on the time frame I was looking. And then I overrode it. And there was one reason why I overrode it. And this is something I've been saying to my premium community. Sidebar, link below. Book a call, talk to a trader if you want to join. Trading isn't for everybody. We focus essentially on three big themes that we want to get right. And this is Bitcoin right now. And it ties in with what I'm saying here. So John was looking at it and saying it might correct. And last night when I was looking at Bitcoin, and that was round about here, I was quite concerned too for how it was looking on the short time frame. And this is the key point that I'll be coming to. But let's just first make that case of what I saw last night. So it was kind of a channel here. So we were at this point roughly here. Kind of a channel. We were now doing this weak grinding up after a exhaustive sell-off at this point and that point. Which is essentially off the highs. So you can argue you'd come into this with quite a strong sell-off. You zigged and zagged for a deeper dip. And in most instances, this is often typical of flagging behavior. A weak rally counter the main trend. So this should have had you thinking at that point of the vertical TG pink line that we could roll over. There's a real risk of it. Bear in mind, this is 15-minute time frame that I'm pointing at the moment. And this is an important thing because I'll be referring back to it. Now, the reason why in the end I just bit my bottom lip and went away, and I also, because I felt it, I spoke to Premium about it as well to ensure that any others that were watching didn't take any action, is this. The unique position that Bitcoin finds itself in right now that most people don't experience. In other words, short time frame, and many people will say to you, technical analysis doesn't work. You know, it didn't work. Short time frame technical analysis regularly works in quiet, non-dominant markets. However, on the bigger time frame right now, you are in this most unique set of circumstances. So let's just take it right back up to a bigger time frame chart and go weekly or 3 daily. Let's go weekly and hide all lines. There you go. This is where you're at, and you keep having to be reminded of where you're at. You are in the construct on the big time frame of a macro breakout. So since the end of 2017 till this point where we first trickled through, had our first week push off, came back to our triggering event. So for us, the triggering event, and we kind of considered it possible at the time, but it wasn't our first primary bias. We only hardened up as the Bitcoin wind up over there broke to the upside when we were thinking Ethereum might come back down and Bitcoin would come back down, but Ethereum more so, and we were wrong on the Ethereum short. Also a wrong view, like John, because we were saying, isn't there another downside? You see, the COVID was such a big event. You lost 65% in the better part of a couple of weeks. It was extreme. And we thought, well, there's Mark II coming. There will still be some form of sell-off. Actually, there's COVID Mark II is here and Bitcoin is running. So this triggering draw, this is effectively our draw. You feigned and break, you went real quiet. Our COT indicator gave us a massive buy over here during this low volatility period. And that's why we were a little disappointed. It had all the things right about it, and it just went up, over, and then back down on that head and shoulder that was in there that you'll spot on the lower time frame. So we were like, really? Is that all you're giving us? This is our strongest of our COT indicators. You want to learn what that COT indicator was, why it was there, etc., and why we were waiting for it? Jump on the link, talk to a real trader, not a salesman who put his hand in his pocket and joined the community as well, and find out the details on the product and his experience so far. Anyway, back to this. So what does it mean? It means that the dominance, when you have a really dominant move on the big time frame, small time frames, you should always bias bull. Small time frames, even when you get a little head and shoulder on a small time frame, and I'll show you an example, and I think we covered this in a previous crypto. You got a drifting up, but on a very broadening structure. You bias bull, and recently you sold off and you had that broadening pattern, you bias bull. In other words, everything is a rest for further continuation. That doesn't mean you won't only have green candles. So we've highlighted where you might start to have a little bit of a challenge. But since the small little fractal broke over here, where I've done this squeezy over there, that's where I'm pointing, you've had 1, 2, 3, 4, 5, 6, 7 weeks, guys. We're on the weekly time frame. 7 weeks of non-stop up weeks. And I know what some of you want to say when you say that. Oh, well, that means the 8th is even more likely. That's like taking a coin and spinning it and getting 8 heads and saying, well, it has to be tails on the 9th spin, when the odds on the coin toss is 50-50. And I'm here to tell you, it doesn't have to be anything. Keep on keeping on, and continuation is the foundation of our program. If you come on board, you'll learn how and why and what we mean by that. But when you're in a breakout, you stay long. And that means you don't tinker with it. You don't trade your P&L, and you don't get sucked into the 1 minute, 2 minute, 5 minute, 10 minute, 15 minute time frames too much, because it will shake you out your trade. It's a psychological game. And if you sell, you will regret it, because you'll go up lighter and you'll make less profits. If you add, you'll regret it, because you'll add too much, and you'll probably add as it's pumping just before one of the key levels we've already highlighted in a previous tube, where you might have a moderate size pullback. Remember the key points I went through in the YouTube, and I put on about 2 YouTubes ago. The pullbacks will be smaller than you think. We are in a dominant break. You need to be net long. You need to stay long. You need to not tinker. All those points coming through. So John would have looked at Bitcoin on the shorter time frame, and like me, he would have seen things technically that were concerning. He might not just have had the frame of reference of a super macro upside HVF structure that we happen to be in right here, right now. And we've drawn this structure not just against the dollar for you. We've drawn it against the NASDAQ. We've drawn it against gold. We've drawn it against silver, other fast appreciating anti-fiats and assets that are prone to be pumped when proliferation occurs. And they are all in upside breakouts. In other words, it's universally a fact, technically, that Bitcoin is in a strong breakout move. So adding, you'll add too much and you'll blow up, because you'll add just before maybe the 17K target. Remember, we gave you a heads up for a 17K target at a 15.3 break on a smaller time frame, which is upside. We'll drop into that smaller time frame again. Remember, we said that the first interim levels come in just past the 19K. You'll probably have a moderate size pullback there as well. So you could have a medium, a moderate to light pullback. What's that mean? I don't actually know. You could have a negative week. You might even have a negative week, a positive, and another negative week in 3-week period after the 17K. It might happen at the 19K. You'll probably have a more significant pullback after the 26K. But in between all these zones, from our first interim pullback, when you ran that first interim and you pull back to your just-in-time entry, which is classic technical analysis, you've been non-stop up. In other words, the gaps in between are covered in a single-minded fashion. Watching on the 5 minute, the 10 minute won't help you. The dominant technical analysis time frame right now is on the macro time frame and is a breakout, and it's the best time of your life, because you have to do the least and you have to chill and not trade your P&L and say, wow, if I was double size, I would have made twice the money. How about I add? twice the amount right now that I'm sitting with such a fat P&L, and you destroy your money management. You can lose money trading up on the upside. By the way, massive announcement, key important announcement. We are going to stream a marathon event with all our favorite guests. So we've already got Lynn Alden booked. We've got George Gammon booked. These are great people in the traditional markets for commentary, financial, economic, the Fed, the proliferation, and crypto. They understand and get Bitcoin, and they are in it. We are getting further guests that I'm awaiting, that I don't want to say their names, that we're asking. In fact, if you have a guest you would like to have appear in our marathon, we're going to do the better part of 5 hours. We might extend it. I'm just going to bring one guest on after another for roughly an hour, 45 minutes to an hour at a time. And we're going to bury 2020. We're doing it on the 20th of December to bury 2020. On the 20th. To bury 2020. You've got the date. It will be Sunday. Get takeouts at the family home. You're sitting in front of your PC, open-ended. All the best minds. And what are we going to be asking them? The 3 biggest learnings and accelerations of events that they noted in this year, what they mean to them, and the 3 big takeouts they'll be taking into 2021 for their wealth building. Would you want the best and smartest minds? We've got a number of people with invites that I've asked that we're waiting for responses on, and that will be on the 20th. If you would like to put people forward, comment below. You can come and spend most of Sunday with us, checking in on your favorite guests. You will ask questions in the live feed. We will stream it live. You will have both people, both parties. I'll facilitate it, and we'll have the guests on the other side, and we'll be able to bring in questions with each of your favorite guests in terms of what you think you would like to know going into 2021 and what their biggest learnings from 2020 actually was. Okay, anyway, let's carry on with this. So you understand that what I'm saying is macro bull. The technical chart that matters most right now is actually the biggest. When you have a listless big market and it's just kind of resting, that's when you can sometimes find short-term directions of ebb and flow, up or downs on lower time frames. But let's just go have a look how the shorter time frames have actually performed, and why I keep saying to you, you've got to stay with the bigger time frame in this case. So a while ago, Bitcoin, look at it. I need to get it a bigger time. Let's get this whole move so far since the up. Okay, so that was the squeeze. This squeeze, what were we? We hadn't realized yet. We thought, is there still another downside move to come? Yeah. And we thought, could you be down? We thought it on Ethereum because it was flatter and uglier. Bitcoin, the God market, said I'm up. So the move was up. You had a head and shoulders there. Went low vol, what did it do? Move was up. You had a volatile broadening structure. Are any of these bullish? Well, you could argue the first one was ambiguous. It could have been up, it could have been down. Yeah, so what happened? You then have had a wind up here. That's our current call for 17K. What happened? You went up. So let's have a look at this in smaller time frames. Your green zones are, you're actually, because you were in the macro breakout, we hadn't accepted that as guaranteed. That was our second choice. We still felt our first bias before this event was that there might be another pullback. It showed us we were wrong. That was bull. Head and shoulders, we then said, okay, this thing's bull. Look how low vol it went. That's not what happens just before you break down. Up. Broadening structure, higher volatility. That's normally not bullish. But in a macro bull, it calmed down a little bit. That was quite a big swing. And then it did that. That worked its way up. Up. Now you're in a squeezy Japanesey that we gave you for the 17K. What did you do? You went up. You're still not home. What happened? Part of the way, you had a down move. And this was worrying. You know, we're looking at this, and I think this is probably what John Bollinger would have looked. It's a channel. We normally split them a little bit. I'll go on a lower time frame. What you would normally expect is maybe a bit of a down leg, a correction to the downside like that. That should have been drawn in red. Everything's orange for some reason to me at the moment. I don't know why. But anyway, maybe you can tell me answers on a postcard or in the comments below. Anyway, so that looks technically like it would have been a bit dull. It was quite a nasty sell-off, and then it was a grinding channel. What did it do? It shook its head and up. In other words, Bitcoin, you need to be net long. You can have a small amount of moderate to small leverage to bulk yourself up, and you leave the goddamn thing. And you should have been down here like that. And if you were like us and you only got real conviction maybe after this head and shoulder began to move, okay, you could have been from there. That's even late compared to us, but we weren't that early. We were still thinking, scenario one, the sell-off, the COVID-19, that huge dip. If it dipped so big in COVID, why didn't it dip again when they do the second round? Difference, a whole bunch different change. So we never got that dip, and that was throwing us off a little bit. Also, to start pumping before the election felt like something that should happen after the election. Now it's motoring, but it actually started to move just before. So it was a first cup gold nugget. Once you realize that, you stay net long. And I've repeated, Bitcoin is it, and I'm not a maximalist. So, you will see what I mean by this. If you go to CoinMarketCap, and I wipe my face a little bit there first, Bitcoin's done 10% in the last 7 days. Ethereum 4. Forget the tethers. XRP, so inconsistent and unreliable, and usually a chronic underperformer. I'm ignoring it, but it has outperformed Bitcoin over the last week, 7 days. Litecoin. Okay, I'll grant you Litecoin. It spikes, but then it collapses sometimes as well. But it's done a better 7 days. Chainlink, no. Bitcoin Cash, no. Down 5. Flat, Binance Coin, 3.8 versus almost 10. Bitcoin, 1%. Cardano, no. SV, flat to down. USD Coin is a stable coin. EOS, 3.5. Underperforming. Bitcoin 3 times better than EOS, which is only a much smaller market cap. It doesn't need near as much money. 1.4 Monero. I'd love it to be higher. It's not. Wrapped Bitcoin is there where Bitcoin is, and a few pips. Tron, no. Stellar, no. Tezos, a champion, a sweetheart in the top 10 at one point. No. Flat to negative. Crypto.com coin once in the top 10. No. 6% down on the last 7 days. Fallen out of the top 10, number 19. Eunice, SEDLEO, also made the top 10. Number 20 at the moment. Down 2.77%. Tell me, guys, apart from Litecoin, is there any reason you should have been in anything else? And if I show you the other weeks before that and before that and before that, Litecoin wasn't at the races. Litecoin wasn't at the races. If we did this by month and we did it by day, you will see that the best, consistently in the top 2 or 3 of the first 25 odd coins is Bitcoin. It's the boss coin. The money, the big money is coming in for the God market. Yes, that's what's happening. If I pop over to the dominance chart, you are essentially here, guys. You are trading this continuation pattern here up, and this is what you had before. This is on the 2-hour time frame. Well, let's just use the overlay draw. This is what you're trading. The dominance of Bitcoin over alts, mainly Ethereum. It's the largest of the others and the others. Look at this. Bitcoin up, break. I showed this pattern to the premium guys and discussing it and saying the key is just staying in. Are you 100% investment in? Is your biggest holding by far Bitcoin? And if you've used any leverage, is it moderate to light and you're just leaving it and not tinkering it and letting it go into the green? Then you are flying. I want all of you to build wealth, whether you choose to engage with me or not. It's here for the little guys. You're supporters of this channel. I appreciate your likes, and I especially appreciate your shares on Facebook, Twitter. But it doesn't matter if you don't. It doesn't matter if you don't buy a coffee mug or a t-shirt below. It doesn't matter what you do. I want you to build wealth, the little guy to win. And this is how you should be playing it. Bitcoin dominance for now. There will come a moment when there will be some reallocation, and Ethereum, I suspect, will have a chronic period of overperformance to Bitcoin. Now's not that time. And I've done this, and I do this with the premium guys, and I've reasserted it when we go into FBDC. There is still a potential head and shoulders target out there for this. It could still come down to the 25 level and round trip. And there was a temptation. There was a temptation, if you look at it like that. There was a bit of a hammer, and everybody was like, way, the first hammer, the first swallow is not your summer. Don't be too early to jump in. And look at this, we're spilling back on, and Bitcoin is going. Bitcoin is going. Note you had a hammer there, small. You had another hammer, and now you had a bigger one. And what's happening now? Rolling over still. So this honey badger is hoovering up the cash. The institutions, the new money goes into the big liquidity and the big name. And that's what you're witnessing right now. And if you do anything, you're going to spoil it. If you add, you're going to get the first pullback, which I've warned you about, of the levels. And if you take off, you're going to go up lighter than you could have done. So if you are right-sized and small or moderate leverage, or you're just in 100% investment, the safest for most people that haven't had training, you are right where you need to be. This is that little squeeze halo break that is all part of a much bigger structure. This is the little spark that lit the fire, guys. It's off. It's off. In fact, it started there, and we had the COTS indication there. If you want to learn about that COTS indication, it was so strong, and it was a great signal. And we started to disbelieve it only when it came back. But it's absolutely natural for it to do a return move. So we realized our mistake early, and we're in, and we're in, and we're in, and we're doing great. Are you doing great? Are you sitting in an alt that's doing minus 3% while you're watching Bitcoin do 10% over the last 7 days? 10% over the last 7 days. You could be 1.5 times leverage. You could be twice leverage. And you could be, your 10 Bitcoin could be 20. Your 1 Bitcoin could be 2. And you're going up at an incredible rate of percentage. Anyway, that's what I think if I was to overlay a judgment, because I kind of felt the same thing John felt. I think his instinct is right, but the small time frames are being dominated right now due to the macro. The macro is the driver. He's the boss, and he's shunting this bus, and he's got his foot on the pedal, and he's driving this damn thing, and you're going downhill, and he's flooring it. This is freaking motoring it. The levels where you might rest. Well, we warned you, it's getting a little bit stretchy now. Possibly by the time this YouTube's out, it can already have its first pushback, and I'll get the haters going. 17K, we have the short time frame structure on that could have a little bit of a pullback post that, so it could run to 17,250 and smash down to 16,3 or even a bit lower. Then 19s. That's your next significant level. Once we've properly left 17K and we've had any form of reaction, you've got a clean 2K on it. But this has been the cleanest run. You had the first interim run over here. It was very early. Fancy that. 10K, by the way, just run. That was your triggering event on this trade, guys. That was your triggering event. And there was your return move right there. And there is the small, tiny wind up that was all, okay, we're ready to properly get motoring now. And that first interim was made over there. Bang, return move. Okay, now second interim. That's at 19K. It's off the chart. I have to pull it in for you so that you can see it. That's where it goes. Still got some way to go. But watch that possible reaction at 17. And then through 25.7, 6,000, that will be done. But don't go jumping in. Don't go get leveraging just before these key events. And wherever you are, you're probably, if you haven't been shaken out, you're probably right-sized. Don't add. You'll only cause trouble. You don't understand the financial mathematics. You truly don't. Okay, so that's the key message on Bitcoin and what you should be doing. Let's take it into that smaller time frame again one more time and just open it up. So this is how your micro analysis might have gone. Switch on the eye and you'll see how we were viewing it. It's classic, by the way. We said it potentially it should make that point by that time. It's literally catching up when I thought it didn't have a hope in hell down here. Anyway, so that was that channel. That was now went into a falling wedge, based out on that low. On that low, it's levels that we've drawn. It comes from HVF method. And then where did the intersection of this capping for this downward based slide? That was a broadening structure. You see, you'll learn about broadening structures in our advanced segment when we complete it and in our community as we teach it. It's very new theory for HVF method. And that says when you're having an up move and you have a downward based broadening structure, actually it's typically continuation. So when the line we expect to have broken is the red line, that is to be broken. And you can see you've interacted with it a couple of times on the downside. So this is a shaking out of the volatility on the downside. It's actually quite bullish. Where did the intersection for this break occur? The breaking of that capping descending grind line and the 16K key levels of significance right there. And boy, you even got a little squeezy as well for that. It wasn't perfect and you wound up to break that. And that, ladies and gentlemen, is the beginning of this impulsive move. You got a little bit of churn with some small pullbacks there, but since then it's been uppity, uppity, up. It's been pretty much plain sailing. So it's going to need a small amount of rest. You're not going to keep going up at this pace. And where does that come? There's our line, 17K. Our full target, I think, is around 16,900. There you go. So we run there. Who knows? You might not have enough momentum to cover the other $100 to actually make. You might balk just before 17K. I'm not writing you a check guarantee for that. 16.9 I am expecting to see fall. So fascinating. And this, remember, at this point over here, this is the key point where both I was checking before turning into bed and maybe John was checking, was the situation at that point. We didn't have any of this information to the right. The time was there and you had this flagging channel and you were leaning on it and it broke on a down leg. There's nothing wrong with his technical analysis if he felt, listen, that's bearish, we might have a deeper correction pull. The key point though is the head and shoulder failed earlier that I showed you. The broadening structure, when it was getting volatile, failed to the upside. They both failed to the upside. Then the symmetrical squeeze right at the beginning, which could have been a down, broke up. Everything breaks up when the macro is a runaway breakout king. And that's where you are. You need to sit on your hands and stay the trade. Sit on your hands and stay with the trade. It's going to serve you the best way. Okay, guys, that's my impassioned plea for your own personal wealth building. Join us for the Berry 2020 event. Don't forget it, on the 20th of December, Sunday. We will set it up later so that you can actually hit the bell. Hit the bell right now for subscribe and go always. Otherwise, you don't get notifications. We are not light, okay? So you will not get notifications from us. Google, if it's Google's discretion, you won't hear it. Okay, so hit the bell and say always notify. I want to know. You will not then miss our Sunday stream. It's going to be a marathon stream. Get properly fed. You'll enjoy it. Sit with the chats, ask your questions, engage, listen to some of the smartest people, and we've got some other really interesting people. I want your comments below, other people you would like us to invite, particularly if you can put it to them that they should come on board and help us secure their attendance. It will be greatly appreciated, and we look forward to running through into the Sunday afternoon, late into the evening, giving you the keys to the kingdom. It's going to be boring. It's going to be lockdown, northern hemisphere winter. For my southern hemisphere folks, it's going to be kind of late European afternoon into American morning day afternoon. So my Australians might have to stay up late or get up early in the morning and catch the second half. The recording will still be hosted. Anyway, like and share. Tell us who you want below for us to talk to, especially if you're going to tweet it out and put it to them. We'd love to get some new folk as well. And see you then. And in the meantime, understand the game. BTC. Macro HVF. It's taken 2.5 years to set up. Bitcoin's only been around for 10. It's 25% of its lifetime, this continuation pattern. Even after target, the pullbacks will be disappointing, but they will be slightly larger and there will be more volatility. We will overperformance 36 and I can see 54. Beyond that, everybody can throw out a big number. Okay, thanks for watching, guys. Catch you later. Shares truly appreciated, and we'll see you next time we live stream in the crypto space. I am the Crypto Sniper saying good night to you and have a good time. Not advice, purely educational purposes.